Australian Wealth Builders, helping time-poor executives build financial independence through property investing.
Thanks for joining us, Cam McLellan here, and I've got with me my good friend and business partner, Michael Bozza Beresford. Boz, how are you?
Very well, Cam. Good to be on another episode.
Fantastic. Yeah, it's good to have you. I want to go through today, Boz, and I thought I'd bring the master in because when it comes to getting people ready to be an investor, you obviously do that on a daily basis. Most people think when they think about investing, they think straight away about the property. So what's the property I need to buy? But there's so much risk involved in setting yourself up, and there's lots of basic steps people can take to get themselves to the point where they're ready for success. So I want to talk through that sort of the before property stage. And this is very relevant for anyone who might be building their portfolio, might have one or two properties already. Doing this process, whether it's your first property or it's your fifth property, is just as important each time. So I want to talk through that. Give us a rundown, Boz. You've been doing this for the last 15 years, every day, all day, talking to people, getting them ready to the start of success. Let's take it back to what some of your fears were initially and what the process was when you started investing, so I can really bring you back to grassroots. I want to get to the core of what people's concerns are and what we can outline for them today to get themselves ready.
Yeah, right. If I think about my own personal experience, the first property I ever bought was a principal place of residence, an ex-principal place of residence. So I'd been in a situation where in my early 20s, I was, coughing up half of the mortgage every month. Once you get your head around that and the fact that it's a fair amount of cash flow, and then I realised that rent and tax benefits were going to be covering most, if not all, of the holding costs for an investment property, I think that probably overcame a lot of the concerns that I probably would have had I not bought a property and been funding that mortgage myself prior.
Yeah.
The main things for me were, is it going to grow? It's not in an area that I know. It was in Perth. It was the first time I'd been to Perth to look at a block of dirt, which in hindsight was a bit of a waste of time because all I was doing was ticking boxes on a set of criteria that, mentors had helped me with. But fundamentally, I think talking to the most common fears that our listeners will probably have from talking to investors, as you say, for 15 years, what if I don't have a tenant? Mm-hmm. What if something goes pear-shaped or the market crashes? How am I going to pay for it? How much is my lifestyle going to be impacted? Or those kind of things. When you say them like that, they sound like pretty big questions.
Yeah.
When you understand some pretty basic steps that you can put in place to be, as you say, investment ready, like most things, they're really not the mountains that they seem. Yeah. They're more, speed bumps on the process that you just have to drive over and be have covered off before you get into buying the property.
Yeah, I think and for myself, I remember there was a definite need that I knew I wanted a better outcome than working my entire life. So I knew that I had to do something different. So from a very young age, and different people get this light bulb moment at different stages of their life. And we talk about that light bulb moment, which is really I need to do something, whether it's buying my second investment property or just getting my head around buying the first one, is understanding why you need to invest to start with. Because like you said, all those mountains of excuses that you usually throw up yourself, you usually bring them up yourself in your own head and give yourself an excuse why you shouldn't invest or why you should stop the process. So if you're really definite on going, I need to invest because otherwise the pension's my outcome, the super's not going to be enough, or I haven't got a family inheritance that's going to help me through my later years. Once you get your head around that concept, the fear should really be about not doing anything at all. So once you've overcome that fear of, or recognize the fear of going, I have to do something, then all those mountains become molehills, don't they?
Yeah, they do. And I say to people on a daily basis, I say, well, with the benefit of hindsight, would you have been happy to buy a property 35 years ago?
Absolutely.
Oh, yeah. How many?
Yeah.
But you tell them all the things that have happened over the journey and how the media beat them up and the sensationalist headlines that scare people off.
Yeah.
All these things. And the number of people that would actually buy 35 years ago drops dramatically. So part of the reason we take the educational process that we do, and part of the reason why we have this podcast channel, is to help inform and educate our listeners on what they can be doing. The first time that you try and ride a bike as a 4 or 5 year old, it's a scary proposition. You've never done it before. You don't know how it works or what's going to happen. And that's magnified with property because you're not riding a $100 bike, you're buying a several $100,000 asset.
Yeah.
But really the steps are the same in terms of getting yourself to the point where you're clear on why you want to be doing it, how you can mitigate your risk, and more importantly, what's financially possible. When you start to tick those boxes and you bring it back to basic terms in terms of what's it's going to cost you on a weekly basis, we've had a lot of success with a lot of nervous investors that are now nowhere near as nervous as they were as they've been able to build their portfolio, or by kind of taking that first step and seeing how it works.
So I want to break down, first of all, and give us some examples of goals and aspirations. We talk a lot about, and when people think about goals, I think in today's day and age, the concept of a goal is something that you can visualize, and it's okay to fail not getting there. And the reason that it's okay to fail is because it's not really a goal. And so I want to really crystallize the difference between a goal and aspiration for people today. So most people, what they class as a goal is really a general aspiration. So, I want to be a pro golfer. Well, that's nice. But if it's going to be a goal, it needs to have an action plan attached to it. And I think that's where you come in and really crystallize things for people. So if it's a set goal, I want to be a pro golfer. Well, my action plan is to get me there is I'll buy some clubs, then I'll start doing a few rounds. Then I'm going to play 36 holes a day, and I'm going to get some professional coaching, and I'm going to enter some amateur tournaments, and on it goes. But you'll have a set action plan to get you to the end destination. And I think when it comes to investing, having that really clear understanding of where you want to be down the track, and then the action plan, talk us through that and the discussions you have with investors or want-to-be investors.
Yeah, right. So I reckon over the journey, probably 3%, it'd be less than 5% of people that I've spoken to have really clear goals. And that's perfectly okay, right? Because you don't have to have it all mapped out when you first start exploring it. But the example of a good goal setup will say something like, in 20 years from now, I want to have replaced my income in today's dollars, which means that I want $100,000 passive income in 20 years from now. In order to be able to do that, I need to establish a portfolio of 4 properties in the first 8 years, and then have held those through the next 20 years.
Well, yep.
This is what it's going to cost me out of pocket to be able to hold those. And what I'm going to do along the way, as I get my next property, going to go on a holiday to celebrate the fact that we've added to our portfolio.
Nice. That's
something like that, where it's really clear. There's an action plan. What's the positive reinforcement? What's the process to deliver the end outcome?
Yeah, and that's, like you said, that's very surprising if someone's got that sort of clarity.
Oh, absolute. Goal setting is not something that we necessarily brought up with, right? Because the way I look at goal setting, the reason why most people don't set goals is because it gives you a reason to fail.
Yeah.
So it's a whole lot better just not to set a goal and then you can't fail, as opposed to being able to wrap your head around the fact that, your ego can handle it if you don't get there, and you're so far better off by shooting for a goal, even if you might not get it.
Yeah. My dad used to drive around, this is years ago, so back in the 80s, and drive around. There was a company called SMI, Self-Motivation Industry or something like that it was. And they used to sell cassette tapes, motivational cassette tapes. My dad would drive around in the car and play these motivational cassette tapes until it was probably the most painful thing I ever come across. But one thing that used to frustrate me with those, and even as a kid in my pre-teens and teens listening to those over and over again, was that they were very motivational, but they had no set action plan to them. They didn't tell you how to do it. And I think that's why I went on the quest to find something that could actually put that motivation into a process. So investment properties was something that I grabbed hold of and went, that I can apply my motivation with the process of something tangible, being investment property, and get me to my outcome. So I think people are either really hyped up, and the way I looked at those tapes and the sort of the hype motivation, and there's still a lot of high motivation around there, without a set process in place to get you there, it's like a really excited dog chasing its tail. It's not getting any traction or any outcome.
Yeah. And on the flip side, a common aspiration that we hear of is, I'd like to be, so Cam, what would you like to invest? Oh, well, I'd like to be financially secure. Yep. What does that mean? Don't know, I haven't really thought about it. Financial security can mean a lot of different things to a lot of different people. So that's an example of an aspiration that doesn't have an action plan. But part of what we work through with our clients is to break it down simply, right? It's not a complex formula. The question that I ask, if people have never thought about this stuff, is, okay, well, do you like your lifestyle today? Yes or no?
Yep.
Assuming it's yes. Right. Well, what if you could have the same lifestyle without having to turn up to work 9 to 5, Monday to Friday to get it?
Sounds appealing.
That's a pretty good place to start. Okay, so then if it's about replacing your income, what's the time frame that you'd like to get there?
Yeah.
Right? And then from there, it's pretty easy. You can work out, right, well, that's where you want to get to, a quantified number in a time frame, and you just have to understand where you're currently sitting today, because people are going to have jobs and assets and super. It's not like they're starting from scratch. They're going to be part of the way towards that journey, but they just need to understand where they want to be, where they are today, and then you can start to put an action plan together to fill the gap.
Yeah. And I think it's nearly allowed, while we've got an Australian financial services license, we're not getting specific on a financial plan, but we're enabling people to go away and basically sketch out their own financial plan and I think that's much more powerful when you can actually do it yourself and work through with your partner, keeping your family or future family in mind and actually working out why you do something. That's when that aspirational thought becomes a goal. And then once you've got that solidified, then you can actually go and put a plan in place to achieve it. So once someone said, all right, I want 100 grand in today's dollars, what's the steps from there to get them over some of those fears? Do you literally break it down and identify, well, if it's debt or if it's, the concept of cleaning toilets or fixing toilets in the middle of the night? Like, talk us through those sort of discussions you have with people.
Yeah, sure. So the question we ask is, what do you feel has held you back in the past? And 9 times out of 10, it'll be one or more of, debt's the devil.
Yeah.
We had it drilled into us from our parents and their parents that debt is bad, fear of debt.
Yeah.
What we call white noise. So that's all of the headlines and stuff in the media that, there's a different message on a Wednesday to what there is on a Monday. And then by Friday, it's something different. So people just have this continual state of confusion and flux.
Yeah.
So lack of clarity.
Wasn't it easy investing when we were younger? I mean, I didn't have a mobile phone. I never read the papers. Do you know what I mean? There was no such thing. And I didn't have the internet. I'd never been to a cafe to waste money on smashed avo either. But there wasn't that barrage of information and, fake news, as, Trump would put it, that coming at you day in, day out to really rock you when it comes to investing. So you haven't got that. Yeah. I feel for people today when they're trying to get their head around investing.
It's hard. And like I say to clients on a daily basis, part of what motivates me is to help people decipher what are the things that actually make a difference and drive markets positively or negatively, as opposed to what you hear in the paper. And the reality is the stuff that drives property markets, those fundamentals, unless it's something that you're interested in or you love it, it's not exactly going to sell papers at a great rate of knots. So far easier for a headline to say that there's going to be a market boom or a market crash by 40%. That gets the job done in terms of their advertising dollars, but it doesn't really help people. The people reading those kind of articles are probably wanting to understand a bit more about the fundamentals, but it's just really hard to access that number-based kind of analysis around property markets, because it's just not the most interesting thing to the majority of the population.
Yeah, you're 100% right. If you think about the concept of taking it from going, all right, well, I've got some clarity around why I want to invest. I want 100 grand in today's income down the track. Here's the assets I got, the liabilities I've got. Here's the projection that I now see that those assets and liabilities will take me on. Physically paying off debt with earned income versus the amount of debt I've got in the time frame. Will it get me there? Yes or no? What assets do I own? Are they appreciating? So once you've got clarity around that, you can attach it to that time frame and that future dollar figure you want. When it comes to realising, which most people do, that they need to invest and buy a property, talk us through the process of obtaining a borrowing capacity, because we haven't even talked about property yet. We've just talked about getting to the thought of buying a property.
Yeah, and I think that's where a lot of people come unstuck, is because they go, right, I want to invest and make a rash/uninformed decision and buy a property, and then they're left with something expensive they've got to try and retrofit and worry about it afterwards.
Yeah.
So the first step that we go through, once understanding where people want to be, where they want to get to and what that plan looks like, is understanding what's possible for them right now. So for me, I wasn't in a position to be able to start for about 18 months after I first looked at it. Yeah. So that was an opportunity for me to upskill and educate myself on how things work, so that when I could pull the trigger, I was, better informed, more confident, etc.
Yeah.
If I had the capacity, then, or understanding what my capacity would have been, is that first step. So it's pretty rare that one property is going to allow you to achieve your financial goals by itself.
Yeah, regardless of if it's a blue chip property, regardless of what sort of property is, one's not going to do it.
Yeah, so it's about understanding that each of these properties will be a building block, but there's no way that you can be thinking about necessarily 4 or 5 investments if you haven't even taken step one. Take step one by understanding what capacity you have, then apply the proven process to select that investment, ensuring that it's not going to be hindering your cash flow. Now, there's a great opportunity today because interest rates are so low. So virtually any property is going to be, or any quality building block to get capital growth is going to be paying for itself or close to. So there's not going to be a significant lifestyle impact to holding it. But that's the first couple of things from a dollars perspective that you've got to be clear on. What can I actually borrow to? No point looking at property that you can't afford. And secondly, how much is it going to cost me out of my pocket? Because if you think it's a great idea and you're covering a large amount of money for a couple of years and then it gets too hard, or your life circumstances change and you're forced to sell it, then the whole process falls over.
Yeah.
So, it's really about, to summarize, understand where you want to get to, understand it's going to take more than one property, understand where you're currently sitting today and what's possible, take that first step, and just like riding a bike, you're a lot better at riding your bike a week after you start, get comfortable with the first one, and then it just becomes lather, rinse, repeat as you grow your portfolio over time. But consistently checking in, are my goals the same? Have they changed?
Yeah.
Reviewing the cash flow. We're very big on incremental rental increases rather than doing nothing for 5 years, then trying to get a dramatic increase. All of those little things, even though property is a long-term investment, having some regular diligence along the process around how you can be saving yourself money or lowering your holding cost, getting ready to duplicate, accessing your equity, all of those are necessary ingredients to getting you towards the next one in time.
Yeah, nice. I think so. If we summarise this, and the next episode, I want to go into a lot more depth in. So my 4-year-old, the property investor, which I know you're very familiar with, has got the straight line process. So obviously being in business and us being in business together, we understand that having a process in place to give you a measured outcome is required in business. As we talk about, property investing is a business and people need to look at investing as it is a business for them. So apply a process to get them the right outcome. I think what you've outlined today is for people that there's a set process in outlining your goals, knowing exactly where you need to be, understand what your current situation is, understand your borrowing capacity and what you can afford. And then that starts to determine the type of property that you are going to acquire within the realm of what you can afford and the building blocks to get you to your end goal. So we can start to see how property investing becomes a process. In the next episode, Boz, I want to drill you, if you don't mind, on the straight line process and go into things like setting up your team, the steps required to get pre-approval. So physically, what things you need to provide to a broker and what process they should go through. I want to talk about the actual property investment selection process. Finding tenants, duplication. So it's going to be a bit of a meaty episode, but I want to get into the depth of everything. You're happy to hang around and we'll record that at the same point and people can go back to back on these ones?
Sounds good.
Nice one, mate. Thank you very much for your time today.
No worries.
You got.
The information featured in this podcast is general in nature and may not be relevant to your personal situation. You should seek advice from a licensed professional before making any investment, insurance, tax, property, or financial planning decision. Guests appearing on this podcast may have a commercial relationship with the companies mentioned, and opinions and views expressed may not reflect those of the Smart Property Investment Network.